prospects for growth or long-term value, two of just many ways investors pick stocks. They're not as sexy as this way. What about just picking based on the company's CEO? It's not just a frivolous thing. Some big money managers do that. Susan Battley is a leadership psychologist and CEO of Battley Performance Consulting. Chuck Akre is portfolio manager of the Akre Focus Fund, and he's been investing in companies based on CEOs for years. So, Chuck, tell us why, and if you could, tell us one of the companies you picked based on the CEO that's done really well for you, and if you could, if you're willing, let us know one you picked on a CEO where they really let you down.
Well, there have been plenty that have let me down over the years, and I must say that in the Akre Focus Fund, we don't pick exclusively on the basis of the CEO. It's one part of our really three-part focus, and that part having to do with the CEO is we say we need to have managers that have an equal part of integrity as well as skill. And we've come to believe over a lot of years that having a terrific manager is maybe even more important than having a great business model. But certainly in the category of those that have worked well for us, that have helped us compound our capital at a very high rate for many years, are Berkshire Hathaway, Markel Corporation, American Tower. We've owned Berkshire for more than 30 years, Markel for almost 20, and American Tower for about 10 years. In all cases, we've compounded our capital at well above market rates of return.
Wow, that's nice to hear. A true long-term investor still in this market. Susan, you know, we certainly focus in the media a lot on CEOs. We invest a great deal in them in terms of their importance. Are they as important as we make them out to be in terms of the leadership of a company?
David, the longer the investment horizon, the more you're investing in the artist and not the painting. So I think this approach has real value. And I would agree that Warren Buffett's strategy, which has always been in his acquisitions, to have great management and then let them continue to do what they're doing well, has been a very wise approach. That said, it's really important that the leadership attributes that, say, a fund manager is looking at are ones that are going to result in superior performance. So this approach where you get beyond the public image and the scripted information, maybe go on site and visit the CEO and the senior management team, can be very smart. It can actually improve decision quality for fund managers. For example, confirmation bias is a well-known issue that behavioral economists know about, and that means that we can overweight first impressions. So if we fall in love with someone or a company or a leader, often then we'll only look for information that confirms our positive impression. If you can get down deep, get to know a leader better, you're actually then able to test that power of first impressions against reality.
I couldn't agree with you more. And in my own experience, it's oftentimes taken me a very long time to understand how good the ones are that are very good.
Well,
and
what do they share then? Give me some sense, Chuck, given your experience. We've certainly, Aaron and I, met our share of CEOs. I know quite a few through the years. Many of them I'm impressed with. It doesn't mean that they actually have strong performers for businesses. What has been the typical trait that you've seen among CEOs that do well?
Well, you know, one of the things that I think is actually reasonably rare is when a CEO actually understands and focuses on the notion of compounding economic value per share.
All right, well, thank you very much. And Chuck, just one quick follow. I know, Jason, we're heavy, but I want to ask you this. You say integrity. How far do you take that? I mean, do you judge someone if you were to find out, for example, that they had personal indiscretions? Does that affect your decision on whether they're a good CEO, a person of integrity professionally?
All of that stuff is in the mix. You know, the way I say it sometimes quite casually is, you know, if once a person's put his hand in my pocket once, my experience is he's likely to do it again. And so all of that stuff is in the mix, and it's an ongoing judgment issue about these people. And you know, Buffett and Munger once had a great expression that says, we don't want to behave in a way which would force us to find out how we'd behave if our backs were against the wall. It's a great way of making a comment about human behavior.
Susan, we're going to be out of time. Real quickly, leadership effectiveness, what's the most important quality for a leader?
The ability to attract and retain the talent, the bench to execute consistently over time.
There you go. And that's hard to do.
Yes. Yes.
In any industry. All right, thanks so much, both of you. We appreciate it. Susan, Chuck.
Thank you very much.
Thank you.